Hello, everybody. So today we're going to talk about hypergrowth healthcare or gems, and there are many gems in this space. And I own a few companies in this space. I'll talk about that. As you know, the channel is all about the stock screeners. Channel kind of got started with the screeners, and so I go back to the screeners. I saw some comments, some funny comments yesterday about me covering MSTR, perhaps a lot, and I love MSTR right now. It's the stock of 2024. I'll keep covering MSTR, of course, but I want to cover the other opportunities as well, and I see three big megatrends. So it's Bitcoin, blockchain in general, right? Solana I like a lot too. Web3, I think that's a big revolution out there. I think the second one is AI, and by AI, we're in the era of software AI right now, but there's going to be hardware AI. The Optimi bot, as they call them, the robo-taxis and all of that stuff, that's also AI. And then the field that is often overlooked by investors, yet one field that has had outstanding returns, albeit a stock picker's market, but that field is healthcare. And there's a lot of revolutions in healthcare. Many of these revolutions in healthcare actually are being enabled by AI. And that's why I cover healthcare, and I intend to spend more time in 2025 studying these opportunities, these healthcare opportunities, because it's true that they are very much undervalued. Note that for healthcare here, I'm talking about the beginning of a value chain. I'm talking about really early days healthcare. I'm talking about drug makers mostly and device makers mostly. I have another section of healthcare which I really believe in, which is more of digitalization of healthcare, more the end of retail healthcare, and the move towards website healthcare, app healthcare. When I cover IMSS, when I cover LifeMD, that's another side that's direct to consumer. I'm early in the value chain in these companies, and let's get started with the first company that I've covered quite a few times on the channel. The first company is TransMedics. So TransMedics predicted to grow revenue quite fast, 77% next 12 months. Gross margin is excellent, 59%. EBITDA margin is 13%, which is good. How much am I paying for that growth? 0.16. And then the rule of 40. So I add my adjusted EBITDA, I add that to the growth rate next 12 months, and I get a rule of 40 of 90, so twice the rule of 40. Quite outstanding. What does TransMedics do? Well, they are the only FDA-approved organ care system. You can see what the system looks like right here. Let me bring it to front. So they do lung, heart, and liver, and these machines maintain the organs alive for multiple days. Hospitals love it. It's got a lot of great outcomes. The old system, which is dry ice, that old system, an organ can last 4 hours. In the case of the OCS system, an organ can last multiple days, which means that surgeons love it because they can do the surgery during the day. You get better outcomes, and you can transport the system. And we know they have vans. They transport sometimes this in vans, but much of the transportation comes from the airline that they've purchased. They've purchased a flight school, which they turn into an airline. By the way, that's why the stock has been flat-ish, if not slightly down compared to a year ago, is because the market doesn't like that they bought an airline. They don't like it, and there was a slowdown in transplants last quarter, and they didn't like that either. The transplant business is largely driven by the driving season, unfortunately, and I think it's a long-term threat of this company. Self-driving cars, in my view, they are long-term threats to this company. That's why I'm looking more at a medium hold on this company, because in the medium term they have a major opportunity. So you can see these are the deceased donors, right? So close to 16,000, and we do a very good job at liver transplant. Liver transplant we can increase by 60-70%, but liver transplant we do a wonderful job at that. But we do a very poor job at heart transplants and lung transplants. These we do a poor job, and of course the donor is the same. But typically typically when they donate organs, they donate multiple organs, and so right now, unfortunately, things like lungs or heart. I mean, to add another unfortunate event to the first unfortunate event, which is the deceased, that's the first unfortunate event. When you add another unfortunate event, it's there's growth. There's a lot of room for growth if we were to already exploit of donations to the level that they are donated, if that makes some sense. You can read all of the outcomes right here. These are the many positive outcomes of the company. One thing I want to point out, two things actually that I want to point out. So the first thing is what's great about TransMedics is that they give us a long-term guidance, 2029, 10,000 transplants in 2029, and right now they are doing 3,600 transplants. So already thanks to that, we can predict a nice 30-ish% growth over and over again in revenue growth. But they gave us an even bigger target, which is the fact that the market may actually be 17,000 heart, lung, and liver transplant, but the bigger deal will be kidney. And kidney in the US, it seems like there's a need, there's a demand, there's a potential for about 25,000 kidney transplants. And you're like, hey, wait, they don't have a kidney transplant machine. Well, yeah, they don't, but they're working on it. And this is their timeline with the development, initiating their FDA trials, and they're planning on having a kidney organ care system by 2029. And that could drive an enormous amount of growth because there's, as you can see, many more kidney in need than there are heart, lungs, or liver. And outside of the US, OUS, and they are planning to go to Europe, that would be a total of 40,000 possible addressable transplants. So quite a major growth runway for this innovative company who was close to no competition. The only competition, well, there's Organ Ox in the United Kingdom, and so that's a different regulatory environment. But the only competition for this company is dry ice and sometimes a circulation technique to keep the organs alive while someone is deceased. That has come under fire for ethical concerns. That's the only competition. I find the competition weak, although obviously I'm not an insider in this sector. Let me move on to stock, and I own TransMedics, by the way. Let me move on to a stock that I don't own, but that I find quite interesting, and it is United Therapeutics. You may be interested to know that their blockbuster drug called Tyvaso is actually one of the most expensive drugs in the US. It's something like $30,000 a month. It's for rare diseases, obviously. What they deal with is lung hypertension, from what I understand. It helps people who have lung hypertension feel better. I haven't done a full deep dive on this, so take this with a grain of salt. I haven't done a full deep dive on this, but that's the blockbusters, Tyvaso, and they are also working on very promising stuff, still in pulmonology, so still in the lung business. They're working on xenotransplants, so that's interesting. Xenotransplants is a fancy way to say that you're going to transfer something from a pig. That does sound better than to say xenotransplant. And they're also working on man-made. And I find, I look at this as real options when you have a man-made liver, Miro Liver ELAB. They're working on growing an actual liver. So there is, and they do a little bit in the realm of lung transplants. Okay, I haven't done my full deep dive, but it does make sense to look at some of the activities of this company as perhaps the next stage after TransMedics, after we fortunately have way less deceased on the roads, fortunately. And when that happens, this is a company that could pick up a lot of the business. And this fits really well, what they talk about organ alternative and organ and xeno. So xeno is essentially pigs, and organ alternatives is this. And they're working on revolutionary waves of growth for themselves beyond the current portfolio, which is all of these drugs, but especially Tyvaso, which is the number one drug for hypertension in the lungs. So specializing in the lungs. Very interesting company. Really briefly, they achieve a rule of 40 out of 69. That's excellent. Unfortunately, they don't quite achieve just... No, they do. I was going to say, unfortunately, it's a 0.3 for EV over GP over RG. So not as cheap as what you can get in healthcare. In healthcare, you can get much cheaper. In the grand scheme of things, when I compare to the 200 stocks in my spreadsheet, 0.3 is cheap. but you can get much cheaper in healthcare. And the reason why they have a 0.3 here, by the way, is because their forward revenue growth is kind of disappointing compared to what is predicted for TransMedics or for TGTX, that is TG Therapeutics. So TG Therapeutics, I still need to do a full analysis on this one just because it grew. If you look at the trailing 12 months revenue, that grew 400%. They got named the number one fastest growing company in North America, according to the Deloitte Technology Fast 500. So out of 500 companies, they were named the fastest growing on all 500 of them. And that is because they have somewhat of a miraculous treatment for MS, multiple sclerosis. And of course, the FDA being the FDA, in the way they approve it, they'll tell you they'll only pay for it if it's relapsing, i.e., if other treatments have not worked, then I guess they'll suppose they'll pay for it. That's kind of how they approve the system. And many times you hear the CEOs talk about their products, and they tell you the products could be used as a first line of defense. But the problem is Briumvi is something like $50,000 or $60,000 for treatment, and so of course the regulator is approving it so that the insurance companies only really have to pay for it when it's like a step 2 or a treatment 2 or a treatment 3. But the treatment is here, and it's called Briumvi, and they hope to be the number one standard of care in MS. And you can't deny, you can't argue with these numbers. It's only trading at 7 times sales. MS is big, by the way. There's a lot of people who have this unfortunate disease. Look at this. How much am I paying for that growth? EV over GP over RG. I'm paying a 0.17. That's very cheap. Rule of 40, well, that's pretty outstanding because we have 107 predicted percentage of growth, revenue growth predicted to be 107% higher. So it's a 122 in rule of 40, which is quite outstanding. And I just want to add something about perhaps bias or sentiment, saying, oh, they only grow 100% next 12 months. They grew 400 the last time. Well, keep in mind the drug was approved in 2022. It takes time to build a commercial team. But also, in my world, when a stock, well, in this case, it's up 400%. When a stock 400% the revenue, i.e., 4x is the revenue, okay, and the stock itself is only up 31%. In my view, I look at the stock performance as lagging, even though it is technically a year later. Like it's technically been a year. They've done 31%, but the revenue growth in the underlying business is so much higher. So as we wait, this business is getting cheaper if the stock price doesn't catch up. And so I find the valuation very compelling on this one, especially because the 107% for next 12 months growth, in my view, is very sandbagged. That would be an enormous deceleration to go from 400 to 107, wouldn't it? So, interested in this one? I don't own it yet, unfortunately. I need to fix that. Moving on to Lantheus. So Lantheus is a stock I own. My performance on it has been really good. I started covering it. It was trading much lower. I can't remember. I think it's at least a 2x or something like that. Okay, yeah, I have my own position. My position is built. It showed up in the screener. It was trading at a much lower valuation. I don't want to add to it because it's the position's built. I'm happy with it. I'll take the journey on radiopharmaceutical, and they are the leading radiopharmaceutical company committed to finding, fighting, and following. So, of course, radiopharmaceuticals originally, they're for radiology. They allow you to light up, they bind to the areas of the body that you need to image. So they're used as imaging agents. They're injections. It's an imaging agent, and it allows you to see a tumor, to see an issue much more clearly than without the injection. Their blockbuster injection is Pylarify, which is an injection for prostate cancer. Now, they are the leader in this, and I want to point out they have a moat, and I still remember listening to a podcast from their chief radioactivity officer, I can't remember how they call it, but the chief nuclear officer, or something like that. Smartest executive I have ever heard. And okay, maybe next to Musk and Saylor. I could not believe how smart this guy was. And I don't say that lightly. I could not believe how smart this guy was. Learned so much about the business. This is a fascinating business because the drugs, they have a half-life, which means that they can't be shipped very far. They need to be overnight shipped. They don't last very long, these drugs. Once they're manufactured, they gotta be used. So there's a built-in moat in this product, in this isotope. Very good. I think it was the chief isotope officer. I think it was. There's a half-life that you have to consider, otherwise the drug loses the potency. And so that makes it very unique. It's a very unique skill set. It's a real niche in pharmaceutical. It's radiopharmaceutical. And I'll conclude with this, which fascinates me on this company, which is why I'm so happy to take a journey with it. Of course, one of the leading diseases, one of the most annoying diseases out there is cancer. And so cancer, of course, on this channel, you'll see I talk about antibodies, right? Genmab. I'm going to get to Genmab. Genmab uses antibody as a novel treatment for cancer. Cancer is still treated largely the way it was treated back in the day. Chemotherapy is a very rough process, and it's made out of tree leaves or tree barks, and it's been around for a long time. So there's innovation for cancer treatment. Their aspect, to that innovation here is using radioactivity to kill the diseased cell. So radioactivity, of course, is very dangerous. It's a poison, but so is chemo. But at micro doses, if you can target the tumor, and if you can bind your isotope to the tumor, in order for the radio to see it, right? In order for the for the radio to see it, that's the way I want to say it. Yeah. If you can bind it and it can light up in an X-ray, right? You can bind to it. Well, you can use that same isotope to perhaps kill the cancer. Not only do you bind to the cancer, but you also kill it. And so the head of isotope goes into that and into how you could use radioactivity to essentially kill bad cells. You use radioactivity to kill bad cells. Anyways, that is my outsider explanation of how this works. Absolutely fascinating, and we're going after more than just prostate cancer, and I think this is a quite interesting company with a long growth runway, and I'm happy to own it for the long run. Also, this now would be a good time to mention that one of the key risks in investing in these companies is that they get bought by like a Johnson & Johnson or like a Amgen. Like that's also something that I wouldn't like, because I want to own a company for the long run. And my guess is that and it happened. There was another company that I loved that got acquired by J&J. You may remember they were using sound to break calcified arteries. Oh, I can't remember the name of that company. Same, that was something like a 3X, and then they got acquired. So I had to say goodbye to this catheter. It was a catheter company that was dealing with calcified arteries and using sound waves, Shockwave. I think it was the name of the company, Shockwave, SWAV. Well, it got acquired, so you know the risk. Like any of these could get acquired, and then you're like, okay, well, too bad. TransMedics, right? TransMedics is only a $2.8 billion company. What if it gets acquired by Medtronic or whatever, and then you feel great? Okay, you did a 3x or 2x on the stock, but in the meantime, you were planning to own it for a decade. So, anyways, sometimes that's one of the risks of these companies. Lantheus is definitely at risk of acquisition, and many of these companies are. Okay, let me move on to Castle Biosciences. So this one is in there because it is cheap. Actually, my EBITDA margin number here is the 12-month one. If you update that right now with those numbers, I'm pretty sure they would be just above a rule of 40. So I'm going to count them as being above a rule of 40, but nothing as outstanding as like a TransMedics or a BioStem or TGTX. But they're above a rule of 40, which is outstanding for any business. At some point, I need to stop nitpicking. They're cheap at a 0.1. They're cheap. And what do they do? What does this company do? And you can look at the number, it's good, right? 82% gross margin, predicted to grow revenue next 12 months at 25%. Enterprise value over revenue is a 1.6. Some of these companies are very cheap. What Castle Biosciences do is they do a skin cancer detection. It's a cancer detection company. I think they do biopsies as well. But anyways, it's called DecisionDX and TissueCypher DX. And this is used to detect skin cancer, and this one is esophageal digestive, some sort of a digestive system cancer. There you go. So these are screeners. If you know anything about Kathy Wood, she used to talk a lot about these companies and about how there's a revolution happening in cancer screening, and so this company, again, I put it next to Lantheus because Lantheus' main business is also cancer screening. Castle Biosciences is cancer screening as well. I haven't done a deep dive in this company. I don't own this company, but I need to do a deep dive and look into it a little more. Okay. BioStem. Now, BioStem is a company that I own. I bought X amount of stock. It's the position, and it will go to either 0 or I don't know, a 10x. I mean, this could be a multi-billion-dollar company. Yeah, even though the idea really, I really should have made this a private video, because some of the comments I got, like this one, this one comment was interesting. I'm not putting my money into placentas, bro. And then in the comment section, I learned that apparently people eat placentas in many cultures. I had no idea that placentas were something that people ate as a dish or something, but apparently they do. So I don't know. It left. I got interesting comments. Nonetheless, this is a serious company. So yes, they do collect donated placentas, right? So a woman is pregnant, she has a baby, there's a placenta. They don't throw away the placenta. They don't eat the placenta. They donate the placenta, and then the placenta is used. Many applications. If you follow Peter Diamandis, he'll tell you this is important for stem cells. We need to collect all of them and use them for stem cells. This company is innovative. This company uses it for bandages, and I'm sure they want to call it something else, right? They want to call it allograft, but as far as this video goes, I'm gonna call it like a bandage. It's essentially what it is. They have a technique. They process it, they cut it, they dry it, and they make it shelf stable for 4 years. And then this looks like this, and you order the size that you need, and it helps wound care and wound healing. And there's a lot of issues with wound healing, especially when people get surgery done. Some people have a hard time healing, and if your wound doesn't heal after something like 30 days, then you may have some problem, and you have to go to a wound care specialist or something like that. Well, this would help that profession, right? It's a placental allograft, and it helps heal much faster, and it's got a lot of benefits. One of the big avenues of growth for this company is one little thing, which is the number one cause of amputation in America, which is, would you be surprised? It is diabetic foot ulcers. Diabetic foot ulcers is apparently one of the one of the most, the leading cause of amputation in America is diabetic foot ulcers. And so they're working on a product and applying that product to diabetic foot ulcers. And of course, with so much diabetes, that's also a problem that you have. And that could be a total addressable market that is enormous. This is a risky company. This is a company that is not in all of brokers because of its size. They're trying to get on the NASDAQ. So that's risky from that standpoint. There's another point why it's risky is there's the CMS, the Medicare Services, the Center for Medicare Services. I have a hard time finding information, but they keep messing up with the billing codes. And now they're like off the billing code, but they're still in the billing code until late February. And now they're off the billing code. And to the best of my research with the new administration, they're going to get back in the billing code. But there is some issue with reimbursement, which is why the stock went all the way from $23 when they got announced coverage by Medicare, and they dropped 50%, and then they gained back some of it because it might have been another reaction. But there is, these companies, unfortunately, and this is true for all of these companies, they depend from the regulator in two spots, right? The regulator is approving the product. Yes, you can sell the product. No, you can't. That's the FDA. And then the regulator is also figuring out whether you're going to get a billing code or not, and whether you're going to get a code. And if you get a billing code in the CMS, then that means that, of course, Medicare is going to cover it, but kind of like every single company and credit card company copied the social security number, and they use social security number with things that have nothing to do with social security. Well, the healthcare system, the insurance system works the same way. They use the CMS codes in order to determine whether they should reimburse themselves, that private insurance, whether they should reimburse themselves, how much they should reimburse, etc., etc., etc. I want to point out that for patients who are willing to pay out of pocket, or patients who have HSA, who place great value on their care and want to pay out of pocket, this is less of a problem. But some patients still largely, overwhelmingly want reimbursement, and so there is this uncertainty on reimbursement on two of their products. So anyways, it's an early days company, so that's why. And the market and the market cap of this company, of course, is the smallest too, which tells you why there's such risk. It's only 240 million in market cap is what BioStem is. I will conclude by telling you that this is the cheapest company in the history of the channel. It's below a 0.01. It's just rounded up because if I round it down, it become a 0.00. So it's something like a 0.007 or 6 or something like that to tell you how cheap. It's ridiculously cheap, and you don't need my spreadsheet. You don't need my assumptions to figure out that it's cheap. Look, it's trading at 0.46 time revenue for a company that is quickly growing and that is highly innovative. So way too cheap in my view. I own it. I own a very small position. Hopefully it 10x's. If it 10x's, that will not be too bad. I guess market cap will still be okay in just a few billions, And the last company that I own, this one I own a little more. Well, I own less than TMDX of this one, but more than BioStem. Perhaps about the same size as my Lantheus, a little less than Lantheus. Anyways, it's beginning to be a nice position, and I'm happy with this one. And if you're on the Patreon, I was buying heavily a few weeks back, and every other day for like a week or 2 weeks I was buying it. Anyways, Genmab is a fascinating company in my view. They focus on antibody cancer treatments. They're not the only ones focusing on that. Many companies focus on that. It's one of the areas of research in cancer, one of the more promising areas of cancer, of treatment for cancer. But they have a lot of partnerships and royalties. They earn a lot of royalties. That's why the gross margin is 96%. And so they underlie many drugs sold by other people, and they also have their own drugs and their portfolio of own drugs. Their blockbuster is Kesimpta, which they've had more than 100,000 treated, and from what I remember, this is just off the top of my head, it's specifically for cervical cancers, Kesimpta. But anyways, quickly about antibody treatments, they claim, and it seems to be true, as far as pure play goes, they are the pure play antibody cancer treatment leader. They are pure play in the antibody space, and so they're predicted to grow at 19%. How much am I paying for that growth? I'm not paying a lot. I'm paying a 0.22. The rule of 40 is achieved at a 54, so that's excellent. And what I like the most about this technology, to be quite honest, is how it works and how it kills cancer. Don't get me wrong. I love Lantheus, like using radioactivity to kill cancer is a stunning idea. This one is fascinating to me. So what do? They have their own proprietary antibodies which they manufacture, and the antibodies they will stick to the cell. They will stick to the membrane of the cell, and the membrane of the cell has receptors which antibodies stick to, and the antibody will stick to the cell. And then this is what the antibody does: it tricks the cell into killing itself. It tricks the cell into suicide, apoptosis, as they call it. So it tricks the cell into suicide. There is also another scenario that they develop where they stick to the cell, and then they have a micro dose of, I'm going to call it poison, that's attached to the antibody, and that the poison that is attached to the antibody sticks to the cancerous cells and delivers the payload. And once the payload is delivered, you kill the cell that way. I don't understand it all. It's all a 10,000-mile view of my understanding of this, but I find this absolutely fascinating, and this is definitely, in my view, the future of cancer care, because chemo is a bazooka. It's what is it, the big bear fat tool. And you don't necessarily need that. You could have much more targeted therapies. And of course, Genmab is yet again on my list of CEOs who complain, who say, no, actually, you can use my treatment in the first line. It can be used the first line of defense. It can be used along with traditional chemotherapy. But in the reimbursement schemes of many nations, they will give you this only if traditional, regular, inexpensive chemotherapy has not worked. And I think in my view, and this is what Peter Diamond talks about, a lot of people I follow talk about that. In my view, there will be a two-speed healthcare where people are able to fly in another country and just get the treatment before the mainstream treatment. Because when you have a country with an established health system, they say, oh, well, this treatment is approved only when less expensive option has not worked. So if the less expensive, more ancient option has not worked, then they will give you the treatment that costs, $50,000, $60,000, $70,000. Is usually the cost of these treatments. Could be more depending on the rarity and the type of case. But this is not as expensive as genomics, right? This is not CRISPR, right? Sickle cell disease, CRISPR, that's $2 million for the treatment to treat sickle cell disease. We're not in that order, but we're still anywhere between 50 and 100 grand for this type of treatments, and so that's why people are not rushing. Insurance companies are not rushing to cover them. But that's going to change, because knowledge is flat, information is flat, and you're going to have more and more patients reading about their story and requesting these treatments and be like, okay, well, you know what, I don't care if they don't cover it, I'll pay for it myself. And I also foresee this being a mega trend, especially as retirees tend to be wealthier and more informed. Anyways, this was it for this video. I know it's long-winded, but hopefully there was a lot of information, and this counterbalances my macro strategy content. So hopefully you like it. This was not investment advice. This was not financial advice. This was not health advice. This is only entertainment. Only. So I hope you were entertained. I hope you learned a thing or two via the entertainment. Please please subscribe, follow me on Patreon, if you support my work, I really appreciate it so much, because it takes a lot of time. Follow me on X as well, and thank you, and have a wonderful day.